Welcome to the top M&A entrepreneurs today. My guest is Mike Yarmo. Mike bought a company, 25 years old, doing 7 million at a 2x multiple. I'd say it's probably a distressed business and distressed seller at the time, but 5 years later, sold it for 5x multiple. Welcome to the show, Mike.
John, pleasure to be here, bud.
Yeah, so I want to hear this story. What were you doing before you decided to become an acquisition entrepreneur?
So I think like probably a lot of people after they get out of school, they go find the best job that they possibly can, the typical 9 to 5, and I ended up landing in the food business. I worked for Starbucks at their corporate head office and their store development, and then kind of backed myself into CPG, working in for a big, one of these big food companies, where I didn't necessarily come from money, so kind of have to just grind, get some notches under your belt in the corporate world before ever making into the entrepreneur world. And I had some great experiences, kind of learning from some excellent operators and marketers at a big ugly food company. And it was just a case where I got a pretty decent portfolio to manage, and was got a lot of great experience, and that kind of gave me access to some pretty cool people who are doing some acquisitions, and said, hey, we like what you're doing in the corporate world. We like interacting with you and how you're kind of growing that your particular portfolio. Why don't you come and leave the corporate world, come and join us. You put a little bit of money in, we'll put a lot more money in, and you will get some sweat equity, and help us grow this sucker. And that's
what was that? What was that? Was that a fund, or was it a search fund, or just a bunch of entrepreneurs that we need basically operators?
Yeah, so a family office.
A family office, okay.
Who had a much larger exit, a generation before, and it was sitting on a pile of cash, looking at ways of deploying it, and they saw an opportunity in the particular market that they eventually pulled me into, which was kind of food adjacent. I had got access to them through my corporate job, and again, we kind of hit it off from just a working environment, and we had a very successful launch on a couple of major products from the big food company into their distribution channels out in the market. And they were on an acquisition spree and said, like, why don't you come join us? You'll put this the CEO hat on. We like how you manage projects, and away we go.
Well, what did they say? What was kind of the offer? We'll put more money in. Was it like 5 and 95, or you put in 20 and they'll put in 80, or what did that sound like?
Yeah, it was a case where I would be in a sizable minority position where I just took my savings and put it into a sizable minority position. They still wanted me to put some skin in the game to keep me interested. If you're just kind of handed a corporate a job like the CEO role, that may not necessarily kind of link you to the job over the long term. And you can always issue warrants or stock options to staff that could vest in future years, or eventually be worth something in a liquidity event. But we knew we would be in this business for at least the next 3 to 5 years. And they said, in order to keep you interested and keep you in the job, we like consistent managers, and we like what you were doing. We would insist that you put in some cash into it, and we'll have a kind of a vesting schedule of increased ownership percentage as you kind of hit key milestones and as you continue on your role, which is pretty standard in a lot.
Yeah, it's pretty standard. I got it offered. I remember an investor offered me, hey, we'll give you. I brought the deal to him, and he said, I'll give you 5%, but it can increase up to 50% over a number of years if you hit these milestones.
I was always super active on trying to build my network. My goal always was to enter an entrepreneurship. So I always, sitting in a corporate role, I always had the eye that I was going to do it. I just didn't know how I was going to get there. Again, not coming from a necessarily wealthy family. So I knew I was going to have to, scrape, save, and utilize my network to eventually jump into business ownership. So when I had met these folks, I kind of primed the position that I'd be interested in doing something like this in the future. Yeah. When they finally were ready for me, they tapped me on the shoulder and said, "Hey, we'll pull you out of the corporate world."
Yeah. And were you married at the time?
I was married, yes.
Yeah. How did that conversation go? Hey, I'm gonna go leave a comfortable 40, 70 hour a week job, that pays the same amount every month, and sends the kids to the dentist office and the lessons, to go to an entrepreneurial position. You cool with that?
Let's just say I love my second wife,
Shit.
who's now the mother of my two children. So
Okay.
let's just say there were some personal sacrifices that had to be made, not necessarily at the time, but business ownership is not for everybody. You have to
Yeah, can I ask you about that? Those personal sacrifices. I just don't think people understand what they're like. Sometimes you have to sacrifice the people around you to replace those with people where you want to go, whatever's in your head.
If you're kind of maybe bootstrapping on your own time without any investors or creditors or staff or all the stakeholders that are involved in the business, if you're going to go the M&A route, all that stuff comes with you, and that puts a lot of burden on the head of the ship. And I ended up working a lot of hours those first couple of years as I was trying to, and I'm sure we'll get into it, as to kind of take the company from a what we didn't think was a distressed position, but ended up being a distressed position, and kind of pivoting it. But that took a lot of hours out of my time, and then unfortunately, it did cost me a marriage. It's I love I'm better off for it today. I'm glad I did it, but at the time it was a difficult road. So
Yeah, I'm sorry to hear that.
I was wide
Yeah.
open from at least from my perspective. That may not be all your guests' perspective, but at least from mine, that's how the
No, life happens, man. Sometimes you come up with your ambitions or aspirations. They don't jive with the person. They're new ones, and they don't jive with the person that you married 5, 10 years ago. It's just reality.
Yep.
Yeah. Yeah. So back to this distressed situation. When they presented it to you, how was it? Was it a case of they were naive, or they were intentionally hiding some things, or what was it?
Well, my partners were in the distribution game. This company was a food distributor,
Yeah.
and we ended up coming into the situation where it was still a profitable company, but the owner had owned it for 25 plus years, had no succession plan, and really was
Zero. He had no kids. He didn't have anybody. Number two wanted to take it over. ESOP, whatever that,
yeah,
nothing. Yeah.
nothing. So it really was an owner north of 60, probably thinking of retirement, but really was just checking the lights every month and just going home. And it really was letting his staff run the business. And when we found it, we thought, this guy's running his business on a fax machine, with old DOS printers. Still, he was, even with this antiquated technology and, frankly, not a lot of energy into the company, he was still profitable. So, imagine what a bunch of capital and, frankly, a smart guy, who they perceive to be a smart guy, come in and run the company, do. I think we can really, X this quite easily. And what we found is that a lot of the relationships who told us during our due diligence phase, said, yeah, no problem. You guys take over the company. We'll be happy to order from you. We found that created a whole set of dominoes that led us to having to pivot the business quite quickly.
So that they said that, but they weren't committed in some kind of contract agreement to keep buying, selling from you. Yeah.
Yeah, what it signaled, what new ownership signaled to the market is that this is a new relationship with these customers, and these customers were mainly bakeries and some grocery stores. What had been extremely long-term relationships, which is what we were basically buying. What we didn't realize was that send a signal to every other person in this market to go in and try to fight for the business and say,
Yeah.
hey,
Well,
we've got a vulnerable situation here. We can undercut pretty easily and take the business. And that's
yeah.
where our miss is that we thought we had the head shake during due diligence, but we didn't realize what kind of that domino effect through a competitive set could create a price war that we weren't prepared to fight at the time.
Did those competitive distributors, they sell the same products that you or comparable products that just replaced you on the shelf?
Yeah, it was a bakery distribution business where you're selling flour, sugar, yeast, oils, stuff like that. So
Oh yeah, it's a commodity, right?
very, very commoditized product. Any idiot can go to go get a pallet of sugar and go sell it into the market, and that's what we found was competitive distributors who are in the market, or the owner's brother-in-law would go buy a pallet of sugar and sell it to his brother-in-law for 10% cheaper than we were, and we're like, okay, we have the overhead and the stakeholders and the debt, and now a new equity investment. We can't just start cutting our margins immediately, and said this is not the right market for us. So we're going to have to pivot and go find another way to utilize our assets.
Yeah, and losing those accounts did that happen immediately or did that happen over time? Like somebody would walk in, one of your top salespeople, and go, "Oh wow, we just lost an account
Yeah,
because yeah,
we knew within the kind of the first 3 months that it was. We're like, okay, we're going to have to rethink our business plan here and figure out a different way to go to market and utilize the trucks and the warehouse and staff and the routes and supplier relationships on how to go to market, because this is not going to work for us. We knew
yeah,
pretty quickly that it was going to have to be a switch, and sales started drying up because everybody who was ordering before started moving their business to cheaper distribution channels, and got a little tight there for a bit. We just put money into the company, and I didn't have any more working capital lines. The
you
bank
just put all your money to the business, and yeah, that's where the stress and strain came from. Yeah,
Yeah, yeah. Partners were, willing to kind of, help us get extended credit lines with the bank, but that only went so far. And when you start to have to clear through, payroll and taxes and all the things that come from running a business, cash got a little tight there pretty quickly. So
yeah, yeah.
it was trial by fire for sure.
Yeah, let me go back to the absentee owner that stopped basically pushing the business for new business. It's kind of like a shark. If you stop, you're going to die, right? What did you learn from that? And there's some visible signs like, oh, he's still using a fax machine and dot matrix printer, right? Clear signs that he goes like he hasn't touched technology or innovated, done anything. What did that tell you about, like, avoid this type of business, or recasting expectations about what we need to do to fix it fast?
There's a cool Twitter account called Sweaty Startup, and he's
I got to write that down. Wait a minute, man. Yeah.
Sweaty Startup. Yeah, check him out. He's a really big Twitter account. His philosophy is always go buy business, go compete with a business with a fax machine and a dot matrix printer. We decided to buy one, and figure to change it. And I would not be scared away from a business like that, but where I think my definite learning came from, and I paid for it, was just to be a little more careful on through the due diligence phase, especially when it comes to customer sets.
Yeah. Who was responsible for the due diligence? I mean,
Yeah, the folks that bought the company. So
yeah.
I'm as guilty as anybody else on not realizing how quickly the relationship changed after money exchange hands.
Yeah. I just learning to uncover. Don't be afraid to ask a question or uncover a stone. So at least you have expectations and mitigate that risk. Do you think there's anything you could have asked them that would have revealed that?
Well, we would have structured it in the ownership in a different way. Instead of all cash up front, it would have been some type of earnout. So if you're trying to buy a business that has long-term relationships on the other side, okay, prove it to me. Give me a reason why to trust you that these long-term relationships will continue after you've gone off into the sunset and let us take the business over. We would have I much rather would have structured it as some type of earnout, or even a better take back, but more likely an earnout in this position that would have tied that previous owner and his relationships more to the future success of the company, rather than to what he told us. But we were at the time firmly believing, and we thought we did our due diligence. We actually went and did interviews.
Yeah, it's not like the family office has never done this before. That's how they got rich. Yeah.
Sure. So yeah, it was. I would say it was maybe a bit too small for them to spend more time on it than they would have, and they kind of trusted that hey, we got confirmation from the top 5 customers, which was almost kind of an 80-20 type model with revenue. So top 20% of the customers were 80% of the revenue.
Yeah.
Those those having that as an earnout rather than just straight up cash and sending the owner off into the distance. I would have happily paid a little bit more to get that certainty in the future.
Yeah. How was that talked about? That sounds like a pretty big risk. Of 80% of the business came from 20% of the customers. Did you guys talk about that a lot and say this concerns me, or we shouldn't do this, or if 20% of the 80% of the business comes from 20% of the customers, and you're a sales guy or a business development guy, you can fix or that risk.
Yeah, we thought this is reliable cash flow. We can bank on it like a T-bill. It's gonna it's just gonna be consistent, and then we'll just get out in the market and go build a book of business. It's kind of an enterprise sales role, but not really. It's still a B2B role where you're still selling into major customers who will do significant buys from you. But the switch cost is fairly low, and often these guys will make a change quite quickly if they see a better mousetrap.
Oh my God! Well, the grocery stores or any bakeries or like that are pretty low margins. They, if I could say 1 or 2%, they'll do it.
Sure, absolutely.
Yeah. So reality sets in. You've got a distressed business, owner not available anymore to turn that around. What do you guys do? What's kind of like the strategy to turn this around, basically?
So after firming up the balance sheet and saying, okay, we're now in a situation where we have to pivot.
Well, when you firm out the balance sheet, did you go recapitalize or borrow some money or put it or yeah?
Yeah, so some guarantees were put down with the bank in order to extend the credit line. So
Okay.
we had an increased revolver to make sure we weren't strapped for payroll or rent or anything.
Right. Okay.
So we can keep current. We took a step back and said, where are some pockets in the industry that are underutilized and not necessarily a competitive Shark Tank like selling a pallet of sugar, for an example. And we stumbled onto to the frozen market, and really that was a conversation with 100 different chefs and food and beverage managers and grocery store operators and whatnot, saying, where's your biggest pain points with your distribution channels? And we found out more than often than not that it was in the frozen section for a variety of reasons. Number one is it's hard to find people in your warehouse who want to spend 8 to 10 hours a day in a minus 18 degree Fahrenheit freezer. So that was kind of step one as to why a lot of frozen distribution companies are hard to come by.
Yeah.
Two is the big guys, the GFSs and the Ciscos of the world, and I'm sure you've seen trucks.
Cisco's huge. Not Cisco as the router business, the SYSCO. Yeah.
Every city across the continent has Cisco trucks running all over the place. So I'm sure you guys have seen them.
Oh yeah.
They dedicate a very small portion of their warehouses and a very small portion of their trucks to frozen. So what that means is they carry very limited SKU sets. They turn a lot of suppliers away. There's a lot of qualified suppliers out there who just can't get into many distribution channels. And we said our new strategy is we're going to be the freezer, your freezer in the city, Mr. and Mrs. Chef. If you need something frozen and you can't get it from Cisco, we'll be your provider.
Let me ask you where that idea, new revenue source, came from. Did you create a culture and environment where it came from, everybody from trucking to new business to sales or were you responsible for that?
Well, that's where ultimately I was responsible for it, but it was it was from my culture, my corporate culture. That's where having that experience and cutting my teeth and being able to ask questions and do market research. Because I ran a portfolio that launched products, and we knew how to ask the right questions of the market and say, what do you want, and where are the gaps? And I for as much as a 9 to 5 is maligned in a lot of circles, it helped me at least, and gave me the right training, to be an entrepreneur.
Yeah. So you had the right skill set to solve this problem.
Yeah,
Yeah.
19, 20 years old, probably not right time to be an entrepreneur, not too green. But after 3, 4, 5 years of increasing responsibility in a corporate role, where you kind of know what the right questions to ask, at least from a market research perspective, I knew how to go out there and ask the questions to the market as to what do you want, and how can I help you? And again, we heard from the horse's mouth, out there, from the customers who are going to actually pay you, that if I had more frozen options, frankly, a lot of restaurants use a lot of frozen products. They're just
Yeah,
like
we
the
see that. I watch that Gordon Ramsay show all the time. Every time he goes to a kitchen, he goes, "What the hell is this? Frozen."
yeah, yeah, exactly. The high end restaurants, Le Bird and Dean or French Laundry, is not probably going to use frozen, but
Yeah, yeah, yeah.
the typical restaurant you find on the corner of Main and First Street has probably got lots of frozen products that just defrosts and uses as products, whether it's breads or fruits or vegetables, or up and down the list. It's especially for more southern states, where it's hard to store products. It's a great alternative for an industry that's quite difficult to operate in. So we basically tried to marry a whole bunch of frozen suppliers who couldn't get Cisco or GFS's time of day, and tried to marry them with what the market was looking for, and that's where we started to see success.
Yeah. How long did that take to solve that?
Yeah, it was. We really started to try to get a book of business from the suppliers. We wanted to make sure if we were going out to the market, that we could succeed. So the first time a chef placed the order, we were there the next day with product. We didn't want to. Chefs and food and beverage managers and grocery store owners don't have a lot of time for you, and if you screw up, then they'll just go find the next guy to do it.
Yeah, like when you go visit them, they're cooking. Like, what? You're not going to be doing anything else. They can't really talk. Yeah.
So we knew that if we were going to do this, we're going to have to do it properly and set the stage with the customer set, that we've pivoted. We're a new business. We've got a new set, and we're ready to service you. And let's nail down that first order to start building up some credibility in the market. So it was a lot of interviews and bringing in the right inventory, with not a lot, just a taste to start, because obviously we had to manage our working capital, but just enough to start getting us the first, second, and third orders with chefs and other clients, to start building up the credibility that we have pivoted and we can do this properly.
What did the economics look like? Were they better in your side? Were there more margin, higher price points? What?
We were lucky. We were able to sign a lot of exclusivities, with very healthy rebate programs from suppliers who were very hungry for distribution channels and getting into customers and getting their product out in the market. So margins increased substantially with our new supply chain. Obviously, there's additional costs that go in from running freezer trucks as opposed to shelf stable trucks, or having industrial sized freezers as opposed to running your warehouse at a normal temperature. And you obviously have to pay your staff a little bit more, and have more staff on hand to rotate them in and out at a better clip, so they're not spending 8 hours a day in a big industrial freezer. So there was definitely a lot more cost to go associated with it, but the increase in the margin, and the deals we were able to sign with suppliers more than offset it.
Yeah.
And made it gave us the ability to grow and start to succeed.
What did these exclusives look like with these? Were they fisheries, kind of co-op fisheries or something, or?
We started off in the really the breads and the dessert categories,
Uh-huh.
that was high turnover products and good products, good margin products, where again, if you're going, if you order a croissant off a restaurant menu, it's likely not made fresh in the back. It's likely par baked, defrosted, and cooked in their ovens in 3 to 5 minutes. Really started off in the dessert category, and just kind of grew from there. So we had a set of about 10 to 15 suppliers. who are in that space, and we try to pick out a really good subset of products, and just say to the chefs and the food and beverage managers of the world, I'm like, if you guys need it, we will carry it. I don't care if it's 1 box or 100 boxes, but we're going to kind of stick to this subset of suppliers so that we're optimizing our supply chain. I didn't want to have the supplier bring me 1 box. I obviously want to get pallets or truckloads, but anything on that list, chef, I will carry for you. Which was not what they were getting out of.
You're doing your darndest to get new business, man.
It's not it's a hard business. It's dirty business. It's not tech. It's not. It wasn't fancy, but it was kind of scraping and clawing our way back to profitability, kind of case by case.
Yeah. And when did that start turning the corner? What did that feel like? How long did that take?
Let's say that process of going from a position where we had to increase our credit lines just to keep the lights on to, hey, we've actually got a cash flowing business here. I would say would have been about 6 months.
That's a fast turnaround for a $7 million plus business. That's great. Yeah.
But again, hard work, and which is where kind of ran into my personal problems, which was working like a dog for a long period of time to try to turn the business around.
Yeah.
So, turnarounds can be exhilarating, and they can be give you that ROI that you can't get in many other asset classes. But once you're able to kind of get through the other side and start cash flowing the business again, and kind of maybe pull back and gain a little bit of work-life balance, we were working extremely hard.
The transformation to where you are now to who you used to be, and the sacrifice you've made, do you think it was worth it?
Absolutely. I mean, today I'm a managing partner and an equity owner in an investment bank in Toronto and Chicago, and we're doing extremely well here. And it took that experience to kind of set me on the path. If I stayed at my corporate job, I might be some assistant vice president buried in some division today. But I took the risk, and we kind of went through trial by fire, as I said, and I'm in a much better spot today than if I just stayed on the safe course.
Nice to hear. So you grew this over a 5-year period. Did anything else happen that even eclipses what it took to fix this or save this business? But then you decided to sell it. What was the reason for that?
Well, we did some smaller acquisitions, and we're constantly on the hunt for tack-ons to try to start building a little more economies of scale, whether it was in the manufacturing space, in the frozen manufacturing space, or other guys who are going to the same existing customers, but maybe in a bit of a different space, to try to decrease the kind of cost per mile.
Sure, have a vertical, just bring them in. How many of those did you make?
But 2 of them.
2 of them, okay.
So it was a case where we just and we looked at tons of businesses to try to acquire, and either we didn't like it, or we didn't think it was run well enough, or we didn't feel it was strategic enough for us. But we looked at tons and tons of businesses to try to acquire, and got smarter as we went along, to again more of that earn out type phase rather than just straight up cash in this space. We got burnt once, we didn't want to get burnt again. And we frankly just thought it would be better in the hands of a larger strategic to kind of take it to the next level. I wanted to, personally, I wanted to start a family, and I met my new wife, and we were getting married, and to be on the road to try to open up a bunch of new ancillary markets would have taken me away too long. And we grew it to a point where it was interesting enough for somebody who wasn't, for a larger strategic to snap us up, and thought it was the right time to do it, both from personally and professionally.
Yeah. How big was that company that acquired it?
I won't disclose the name, but not quite the Cisco size, but a very large regional.
Yeah. And you got it to, it was definitely clear. Did you start at a higher multiple, or a 5X was, they were a strategic buyer and they need to get that?
Yeah, It's not necessarily the case today in 2022 that a strategic buyer will pay the same amount as a financial buyer. They're about equivalent. But when we sold the company in 2018, it was financial buyers were definitely on the hunt and willing to pay an extreme premium on EBITDA for enterprise value for a company. So we got lucky. We got over an EBITDA level that kind of justified a higher multiple. It's when you kind of cross certain thresholds, 500,000, 1 million, 5 million, you get to a point where you get more larger strategics who are willing to pay. That's not necessarily dilutive to
And
their.
they could make their money back in a week if the product or the tuck-in fits. Yeah, I'm exaggerating, but
large strategics are likely trading for 10 to 15 multiple. So they never want acquisitions to be dilutive to their earnings per share, to their existing shareholders. So kind of work backwards from where they're trading to see what kind of valuations you can garner. But as you get to a point in size where it makes more sense for them to acquire it, it's not. It moves the needle for them, but it's still not dilutive. Then you start to understand where that range is.
yeah. Well, why would it be a concern that it's dilutive? I mean, if it's a great product that could, some product lines you purchase could be billion-dollar products in the future.
Yeah, it's
Yeah.
Existing shareholders, whether they put a lot of capital into the business or not, are very reluctant to be diluted down and own less of a business. They may lose board seats, they might lose voting rights. There's a bunch of different reasons why they try to make
acquisitions. Yeah, it's a power. Yeah.
They obviously likely have their shareholders, stakeholders that they have to represent. They want to show that they're getting a deal as well.
Yeah. How was your relationship with the family office over that 5-year period? Yeah, I mean, was it great? Were they helpful? They, little heated at times, or friction, or what was it?
Yeah, sure. Like any long-term relationship, you have your ups and downs, but we're still friendly today, and I still converse with them on a regular basis. And in my investment banking position now, I show them new deals to look at when something I think fits their box.
Yeah. So what are you doing now? You're in investment banking. So are you looking for companies and help them sell, or are you acquiring yourself?
What we do, we're doing both. So it's either off our own balance sheet or primarily, we're M&A or balance sheet restructuring investment bankers. Where if you've got a company to sell, we'll represent you to a strategic or to a high quality private equity company and help you get structure the deal accordingly to help do what I did for myself and get you the best deal possible. Again, I learned by my own mistakes, which is probably better than going to a certain business school and just learning off a piece of paper and through a test. So I learned through my own mistakes and my own stupidity as to what not to do. So I feel that makes me a lot smarter investment banker now than if I had just kind of come out of school and started doing this.
Yeah, I mean, success kind of hides a lot of red flags if everything goes great for you. And I don't know a lot of people that just have had perfect success all their life, but usually it's a trial by fire. This case that you're inserted into this scenario that requires 100% of your energy and time to solve it because you're in it, and you did it, and you're transformed by that.
Yeah, absolutely. I wouldn't trade my ups and downs for anything. It wasn't a straight line up. It was definitely ups and downs, and there were some days where I went home and I was just exhausted and could hardly get my head off the pillow the next morning. But when you realize you've got a lot of people kind of relying on you, you just pull yourself up and get back out there and fight another day. So
what kind of thoughts go through your head? The moments like, I just want to quit. I want to quit. It's too much. It's too much sacrifice. What do you tell yourself?
Well, I was bound by a partnership agreement to basically say, get your ass out of bed, buddy. Go out and fight another day. So
you'll get another account.
I didn't want to get sued. I didn't want to get sued. That was for sure. But it's you just you got to fight through that and just realize that there are more people than just yourself that are relying on your expertise and your efforts to provide them a livelihood. We had, you know, up to 20 plus employees who, you know, relied on, you know, the paycheck that was generated from our efforts and our, you know, with the value that we provided out in the market to feed their families. And that it's definitely a motivation to get out there and keep fighting.
Yeah, I like my kind of point is, you know, you're no longer trying to serve your own ego. You're actually in the service of others because they're dependent upon what happens and what you do.
Correct. Absolutely.
Yeah. Yeah. Mike, that was a fantastic story. And I greatly appreciate you taking the time to do that.
Oh, you're welcome. No problem.
Yeah. So, folks, if you like this episode, make sure you like and hit the bell button below to get more episodes. So, thank you so much, Mike, for being on the episode.
My pleasure.
Take care. I hope this video has inspired you. If you need help buying your first $1 million business, make sure to visit me at dealflowsystem.net. If you like this video, make sure you subscribe down below. Comment on it, share it, tell everyone about it. And thanks for watching.